Crypto seems like a gold rush, doesn't it? I mean, stories of overnight millionaires, Bitcoin soaring past $100,000, and the fear that you're too late to the game. But what if I told you that most people diving into crypto are doing it wrong and losing money because of it? This video, it's not about hype, it's about how. If you're curious about Bitcoin and you want to avoid beginner mistakes and you're ready to learn a simple, smart strategy to invest safely, then my friends, you're in the right spot. Stick with me because by the end of this video, you're going to have the tools to start your crypto journey confidently and responsibly. So welcome back to the Wealth Outside of Wall Street channel, where we challenge conventional financial wisdom and we empower you to take control over your money and ultimately your future. In our last video, we explored Bitcoin's history, its cycles, and why we might be on the verge of mass adoption. If you haven't watched that video yet, you're gonna wanna pause this one and go back to that. I'm gonna link it for you right below. Because today we're going to be taking that information, that foundational knowledge, and we're gonna take it a step further. We're gonna put it into action. This video is about the how to invest in crypto responsibly, how to integrate Bitcoin into your portfolio, and how to avoid the pitfalls that leave so many beginners burned. This isn't another hype-filled guide to chasing the latest trend, to becoming a cryptocurrency billionaire overnight. It's a tactical, proven approach that positions Bitcoin as part of a thoughtful, long-term wealth building plan. If you're ready to navigate the world of crypto with confidence, then my friends, let's dive in. First off, let's talk about the problem with FOMO. We live in a world where we can see what everyone else is doing, and it always looks like people are having a phenomenal time and we're missing out. And that's known as FOMO, the fear of missing out. And crypto is no different. There is a lot of FOMO, a lot of hype around this currency right now. And while some of it is justified, a lot of it is just hype. Headlines are screaming right now about Bitcoin reaching $100,000, and stories of overnight millionaires flood social media. It's easy to feel like you're missing out. But here's the truth. Success in crypto isn't about luck or perfect timing. It's about a strategy. Without a clear plan, it's all too easy to get swept up in the hype and make costly mistakes. To have a crypto millionaire empire today and have nothing tomorrow. So before we think about investing in Bitcoin, you have to master three critical fundamentals, the financial IQs that allow you to build lasting wealth, not just try to make it big with one single investment. And the first one is the IQ of making money. If you want real wealth and freedom, the very first thing that you have to have control over is your ability to create value and exchange that value to build a stable income stream. This is the foundation of all wealth building, making money. The second financial IQ that you need to master is how to control your cash flow, how to pay yourself first, and how to aim to save at least 20% of your income. It's keeping money. Second to keeping money, you have to master the tax game. Cryptocurrency right now is exciting because taxes feel a little bit ambiguous, but I guarantee you taxes are part of the equation no matter what you're doing. So you have to master making money and keeping money. This now brings me to financial IQ number 3, investing your money. Now the first part that you have to understand when it comes to investing is you need to focus on assets that generate income. True financial freedom isn't about how much money you have, what your cryptocurrency is worth. It's about how much cash flow, how much income your assets generate. Now that we've discussed the three financial IQs, let's talk about where Bitcoin fits in. Bitcoin is a speculative investment. It's about converting dollars into a digital asset with potential exponential growth. Now, to truly grasp the potential of Bitcoin, I'm gonna revisit one of Bitcoin's most legendary stories. On May 22nd, 2010, a programmer named Lazio spent 10,000 Bitcoins to buy 2 large Papa John pizzas. At the time, it was kind of joked about that this individual spent some magical form of cryptocurrency to buy 2 pizzas, and everyone on the internet was making fun of it. But today, had Lazio not traded the 10,000 Bitcoin to buy those 2 pizzas, that $10,000 in cryptocurrency would be worth well over $1 billion. Now, this iconic moment is celebrated annually as Bitcoin Pizza Day, and it marks the incredible journey that Bitcoin has gone on from an obscure experiment to a potential store of value. But let's not overlook the other side of this story. It could have easily been a tale of someone trading 10,000 soon-to-be worthless Bitcoins for 2 very delicious pizzas. That's the reality of speculative investments. They carry with it promise of extraordinary rewards, but they also carry with it risk of complete and total loss. So this brings up the question, where should Bitcoin fit into your wealth building strategy? First, it's crucial to remember that Bitcoin and all other forms of cryptocurrency are not cash flowing assets. They do not produce income, which means the foundation of your financial strategy needs to be assets that produce income. Cryptocurrency should sit on top of that. It's a speculation once you have enough assets that are producing enough income to buy your time back. So Bitcoin should not form the foundation of your portfolio. Instead, I want you to think about it kind of like a spice that enhances your overall strategy, not the main course. Now that said, Bitcoin's transformation from a speculative asset to a globally recognized store of value is unfolding before our eyes. President-elect Donald Trump has announced plans for the US Bitcoin Reserve. BlackRock, the world's largest asset manager, has launched a Bitcoin ETF. And even longtime skeptics like JP Morgan Chase's Jamie Dimon are beginning to embrace Bitcoin. So the tides are undeniably shifting. Bitcoin is gaining institutional and government momentum, signaling that the future of money might not be in the future, but it might be right here. So the question is, will you be ready to take advantage of this shift, or will you be watching on the sidelines? So step number one, before you trade a single dollar for any form of cryptocurrency, the first step that you must take is increasing your financial intelligence. Take the time to educate yourself. Cryptocurrency, it's exciting, but it's also full of hype and a lot of misinformation. There are great resources out there, but there are also plenty of bad actors looking to take advantage of beginners. Learn the principles behind Bitcoin, understand its scarcity, decentralization, and why it's often called digital gold. The more you know, the less likely you are to make costly mistakes. Step number two, start small and stay consistent. The biggest mistake beginners make is they go all in. They place everything on black, and instead of starting small, they just say, look, I'm just gonna try to make everything on this one move. Those are the people that never end up building wealth. They might strike it big, but because they don't know how they did it and they don't know how to duplicate their success, their wealth doesn't last long. So instead, I want you to start with a small allocation. 2, maybe even 5% of your overall portfolio is a good rule of thumb. Now, if you're just beginning and you have a lot of time in front of you, maybe you could accelerate that to 10 to 15% of your total portfolio. One of the best ways to do this is to invest through dollar cost averaging. Set up automatic purchases, daily, weekly, or even monthly, so you're constantly buying regardless of price fluctuations. This strategy smooths out volatility and it removes the emotional guesswork of trying to time the markets. And step number 3 is probably the most important: secure your Bitcoin. If you don't own your private keys, you don't truly own your Bitcoin. Leaving your cryptocurrency on an exchange is kind of like leaving cash on your front porch. It's vulnerable now and it's out of your control. Remember, the entire purpose of cryptocurrency is to be decentralized, to be a secure form of money that you control, free of government manipulation and the relentless devaluation caused by endless money printing. If you fail to secure your Bitcoin, you're undermining the very mission of crypto, to keep your wealth in your hands. Here's a powerful way to categorize different forms of money. The dollar, that's the government's money. Gold, well, that's God's money. It's a natural resource. And crypto, well, that's the people's money. It's a form of currency created by the people, for the people, to protect them from, well, the government. To truly embrace the power of Bitcoin, move it to a cold storage wallet like a Ledger or a Trezor. For even greater security, consider a multi-signature wallet, which requires multiple keys to access your funds. Think of this as a high-security vault for your digital wealth, where your money remains truly yours. This version enhances clarity and flow while emphasizing the core principles of Bitcoin. Now, this brings me to step 4, and this one I cannot emphasize enough. Think long-term. Wealth isn't what you have today, it's not what you have tomorrow. Wealth is what you have over your entire lifespan. If you have a lot of capital today and a lot of options today, but you're back in desolation tomorrow, are you really wealthy? Was the high worth the low? The best way to think about cryptocurrency is to integrate it into a long-term strategy. Think in decades and act in days. As much hype and FOMO as there is around cryptocurrency, especially Bitcoin, it's not a get-rich-quick scheme. It's a long-term bet on the future of money. Yes, it has the potential to reach 1 million per coin, but it also could go to 0. That's why it's critical to invest only what you can afford to lose and approach it with a mindset of patience. This is a game measured in years, in decades, not weeks. So if you're following the strategy outlined in this video, you'll remember that Bitcoin should only come into play after you've secured enough cash flowing assets or are at least on track to achieve financial freedom within a desired time frame. In this context, Bitcoin serves as a wonderful, an amazing hedge, not your primary wealth building tool. It's a way to protect and offset the volatility of the dollar and protect against inflation. It might even be a way to knock it out of the park on top of the foundation that you've already built. And with Bitcoin, you might not ever need to sell it or even want to sell it, because its true purpose could lie in preserving value rather than generating income. By holding Bitcoin strategically, you position yourself to weather economic uncertainty while staying focused on building a sustainable and abundant financial future. Step number 5 is diversifying without overcomplicating. Start with Bitcoin because it's the most established and secure form of cryptocurrency that we have today. Once you're comfortable with cryptocurrency, then maybe you consider things like Ethereum, which powers many decentralized applications. Avoid chasing every new altcoin. For as many altcoins that come on the market, there are just as many that go out tomorrow, with people having lost money and ultimately their dreams. Now, it's tempting, but most altcoins lack the staying power and the adoption of Bitcoin and Ethereum. Now, to kind of put a bow on all of this, I want to go back to the concept of wealth and how to integrate cryptocurrency into your overall wealth generating activities. The first thing that we have to talk about here is the evolving regulatory landscape. Now, governments are still trying to figure out how to handle Bitcoin. While some countries like El Salvador have embraced it as legal tender, others like China, they've massively cracked down. And in the United States, with President Trump coming into the office, he's going in like a bull in a china shop. I think he might try to buy all the Bitcoin and hold it in strategic reserve for the United States. Now, that's a joke, but President Trump is very pro cryptocurrency and very pro Bitcoin. I'm gonna do a whole nother video on why President Trump is going to use Bitcoin to wipe out the federal debt. But the main thing I want you to understand is the landscape is evolving. Positive developments like Bitcoin, ETFs, and institutional adoption are signaling a growing legitimacy. But regulations could still impact Bitcoin's adoption and value, so I want you to stay informed on this. Because Bitcoin is still highly volatile. Until it reaches mass adoption, volatility are just going to be part of the game. So if you're getting into Bitcoin, again, think in decades, act in days. Because volatility, it's not necessarily bad if you approach it with a long-term mindset. The key is discipline. Don't gamble your life savings or react impulsively to short-term price swings. So to wrap this all up for you, what does wealth mean for you? Why are you investing in Bitcoin? Is it because of FOMO, or is it part of a bigger vision for your financial future? Remember, money is just a tool. It's what you do with it that matters. Wealth is about creating freedom, security, and meaningful experiences for you and your loved ones. And Bitcoin can be a very powerful piece of this puzzle, but it's not the whole picture. So if you found this video valuable, share it with a friend. Let's get the conversation going about how crypto fits into the bigger wealth building strategy. Leave a comment below. What's your biggest takeaway or question about investing in Bitcoin or anything else? I'd love to hear from you. And don't forget to subscribe to the Wealth Outside of Wall Street channel. This channel is here to do one thing, my friends, to empower you with money to achieve financial freedom in 10 years or less. The Bitcoin revolution is here. Your future is waiting. And my friends, it's time for you to rise up and claim it. Fearless.